Thanks for joining us again at Real Estate Talk with Tisha, and I am here with one of my favorite lenders, David deCourcy at Seacliff Mortgage.
Thank you for having me.
It's always fun to work with him. And if you guys haven't checked out our previous videos in this series, I really encourage you to do that. We went through the pre-approval and pre-qualification process. We went through the whole overview of the loan process. We demystified loan pricing, and that was a really good one and really meaty. But let's now talk about alternate loan products. So what is an alternate loan product? What does that mean?
Basically what that means is that in the event that you can't get a loan through a traditional bank, there
like
is
a conventional, what we call a conventional loan, right?
There is a way for you to purchase a home.
And I always tell my clients this, and I think I might have gotten it from you. If you've got enough money to make a mortgage payment, there is a loan product out there for you.
Absolutely.
All right.
If you can afford it, you can get it.
Okay, so I think we're going to talk about three categories of alternate loan products. The first category being government financing. Mm-hmm. So tell us what that is.
Government loans are financed by various government agencies. The two most popular ones are FHA, which are governed by HUD, and VA loans, which are governed by the Veterans Administration.
Okay.
Generally, those loans are designed to help people access home ownership without the down payment that's usually required to buy a home.
Right. So with a VA, you can get like as little as 0% down.
0% down.
And what's more typical is the FHA?
FHA is 3.5% down.
3.5 down. Okay.
Not only do they allow for a less down payment, but they also allow for a higher income to debt ratio. So
which means you can qualify for more house.
And they don't really look so badly on bumps on your credit. If you've got some problems, some bumps in the road, if life's thrown you a curveball, it doesn't matter if you're going with a government loan.
Right, like there's a lower time period, say you've had a bankruptcy or short sale or something like that. I know you can get into an FHA sooner than you could a conventional.
That is correct. That is correct.
Okay. Which may, even though those might be a higher cost, at some point it actually might make sense, because if you wait down the line to buy something, then
the house is going to be more expensive anyway.
The house is going to be more expensive, absolutely. Okay, so then our next category is what we call alternate documentation loans.
Right.
So let's talk about, what is that?
What that is mostly for self-employed people. Because if you're self-employed, you try and write off as much income as possible on your tax returns.
Right.
And what that does is it precludes you from buying a larger house because you don't really have as much money on paper.
Okay.
What this does is it analyzes things like your bank statements and determines how much money you are actually making,
flowing through,
what your cash flow is,
and
then it allows you a true number in terms of how much house you can afford.
Okay.
Now, they're a little bit more expensive than traditional loans, generally about 0.5% to 1% higher based on what your credit score is.
Right.
But once again, it's better than not being able to buy a house at all.
Right, absolutely, absolutely. And it's also better than our next category of loans, which is the hard money loan.
That is correct.
Because those are typically much higher than 0.5% more than a conventional, correct?
Yes. Generally, hard money loans are given by individual people as opposed to banks. More often than not, then they're in double digits.
In terms of the interest rate?
In terms of the interest rate.
Right, yeah.
And basically, their only qualification is the equity in the property. If you have significant equity, whether you're buying or whether you're purchasing, but as long as the equity's there, generally they'll give you the loan. And you pay for the fact that there is no credit or income qualification.
Right, absolutely. And typically the hard money loans go to investors, correct?
Investors use them because they use them for a shorter term.
Okay.
In certain circumstances, you can use them to buy a home. We generally don't recommend them.
Okay, fantastic. So there you have it. Those are alternate loan products. And like I said, if you've got enough money to make a mortgage payment, there is a loan product out there for you. And so you will be able to make a property purchase with a conventional loan or perhaps one of these three categories of alternate financing. So thanks again, David, for joining us.
Thank you.
And we'll look forward to catching you on the next episode of Real Estate Talk with Tisha.